Well, as John mentioned there, Tesla shares fell after boss Elon Musk announced those sweeping cost-cutting plans to investors on Wednesday. Let's drill down into this a little more. Dan Ives is Managing Director of Equity Research at Wedbush Securities. Dan, good to see you. Welcome to the program. What's gone wrong here as far as the investors are concerned?
Look, I think ultimately they're a victim of their own success. I mean, these events, and I think Apple is similar, investors always want more meat on the bone. In terms of here, it was really a lower priced sub 30,000 vehicle. But if you look at the day, I mean, they've laid out sort of the strategy over the next decade. It's almost a flex the muscles type of event in terms of electric vehicles and where Tesla is, where many are tripping over their own shoelaces.
I mean, governments around the world are trying to get us to give up on internal combustion engines, petrol or diesel, as we call them in Europe. Musk has previously said affordability is the big obstacle to going electric and mass producing smaller, affordable Teslas. He knows there's a problem, doesn't he?
Look, it's the carrot and the stick. In other words, you're never going to get to pure mass volumes, whether US, Europe, or anywhere, if you're talking about a $60,000, $70,000 vehicle. You need to really get to 25,000, 30,000. Obviously, GM, Ford, VW, many others are going after EVs, but price is key. And battery is the biggest cost component to electric vehicles, and really it's driving that cost down. And that was really the big focus yesterday, in terms of where Tesla is today, and especially driving the vision.
Tesla shares are rising again after, let's face it, a pretty dreadful 2022. Where do you see Tesla going from here?
Look, I mean, our view, and we've been bullish on Tesla many years, I view it along with Apple as probably the most transformational companies in the world. Now, our view of electric vehicles, we're still only in the early stages of where this is all going. And I believe what you've seen with the stock is that, Musk is clearly some of the rhetoric and some of that dark clouds from Twitter started to dissipate. And I think this is ultimately a stock, $225 is our price target. And I think that's sort of the level to get to the base case for Tesla.
The truth is, whether you're building petrol or diesel cars or electric, there's much less profit in smaller cars. That's the truth of it, isn't it?
Of course, and that's why it's all about battery technology. And if you look at yesterday, when you sort of peel away the onion, it was really trying to show that they could get to 40 to 50% less cost to produce a car. I mean, that's why Mexico is going to be important in terms of potentially a lower cost vehicle. They talked about a gigafactory that they're building out there. But that's really the issue, is that when you get to those levels, you need to get there from a margin perspective. That's where they're going.
And tell us more about the significance of Tesla's announcement on Mexico. What does that mean for production in the US, for example?
Well, I think you've seen, especially the gigafactory in Berlin, which is key to Europe in terms of right now, a European customer gets their car from China. So the build out of Berlin, build out of Austin, which is where Cybertruck's going to be built. But Mexico is going to be important, especially a lower cost vehicle, in terms of what we're seeing there, that build out. I think that's something investors want to see, because you can't just talk the talk, you need to walk the walk. And ultimately, I think that gigafactory in Monterrey, Mexico is going to be key to that.
Dan, good to see you. Thanks very much for coming on the program.
Thanks
Dan Ives, Managing Director of Equity Research at Wedbush Securities.